Hello traders and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video we're going to be talking about the Fibonacci EMA strategy, which is a powerful yet straightforward trading method that combines the precision of Fibonacci numbers with the reliability of exponential moving averages. So if you've been struggling to identify clear entry and exit points or to accurately determine market trends, this strategy could provide the clarity you need. So by the end of this video, you will fully understand how to apply the Fibonacci EMA strategy step by step in your own trading and learn exactly what common mistakes you must avoid to maximize your results, giving you a complete and practical approach to trading Forex effectively. So without wasting any much of your time, let's get started. First of all, what is the Fibonacci EMA strategy? This is a powerful trading tool that combines the mathematical precision of Fibonacci numbers with the responsiveness of exponential moving averages. So this strategy leverages the natural patterns found in financial markets, which often align with the Fibonacci sequence. At its core, the Fibonacci EMA uses the EMAs with periods based on Fibonacci numbers, typically 5, 8, 13, and 21. So I'm just going to add the EMA to our chart. So I like to add multiple EMAs, so I'm just going to use the ribbon, the moving average ribbon. This is because I'll be adding multiple EMAs to the chart, so changing them to EMA. This is TradingView platform and we're on the 1 hour on GBP USD. Alright, so the first number, according to Fibonacci numbers, the first one is 5, the next is 8, the next is 13, and the last one is 21. So I'm just gonna change this to EMA also. Now I'm gonna change their colors also. This should be blue, this should be red. Okay, I'll use red here, blue here, green is green here. All right, and maybe I'll use yellow or orange. All right, there we have it. These are the EMAs, the Fibonacci EMAs, which we'll be using. The specific numbers are chosen because they are part of the Fibonacci sequence, where each number is the sum of the two preceding ones. This sequence has been observed in various natural phenomena and is believed to have significance in financial markets as well. This strategy works by plotting these Fibonacci-based EMAs on your price chart, and the EMAs with shorter periods like the 5 and 8 EMAs react more quickly to price changes, while the longer period EMAs such as the 13 and 21 EMAs, they provide a smoother representation of the overall trend. Now they are all lined up. The red is the 5 EMA, the 8 is the blue EMA, and the green is for the 13 EMA, and this orange one here is for the 21 EMA. So I'm going to show you how you can use this Fibonacci EMA to trade the markets effectively. As you can see in this chart, the different EMAs interact with each other and the price action. So when the shorter period EMAs cross above or below the longer period EMAs, it can signal potential trend changes or trading opportunities. And also, the Fibonacci EMA strategy is particularly useful for identifying trend direction. As you can see, this uptrend here, we have the EMAs all pointing upwards and price consistently above all EMAs. And when all 4 EMAs are moving in the same direction, just like this one, and are well spaced, it indicates a strong trend. Conversely, when the EMAs are intertwined and moving sideways, it suggests a ranging market. As you can see here, this is a ranging market, and you can see how they are intertwined. You can see how they are all intertwined right here. But here we see the stretching of all 4 EMAs moving in the same direction. They are well spaced, and this shows a strong bearish trend. So that is that for that. Let's quickly hop on how to trade using the Fibonacci EMA strategy. How can we use this information to trade? So the first step is to start by adding the 3 exponential moving averages to your chart. You could stop at the 5, 8, 13, or you could also add the 21 depending on your choice, but I'll prefer you add the 5, 8, 13, and 21. So there should be 4 EMAs on your chart. So these EMAs will form the core of your strategy. So as you can see in this chart, we have the 4 EMAs, the 5 EMA, which is the red, the 8 the blue, the green is the 13 EMA, and this orange one is the 21 EMA. So after putting this into your chart, the next step is to identify the trend direction. Use the EMAs to determine the overall trend direction. In an uptrend, you will see the 5 EMA above the 8 EMA, which is also above the 13 EMA. You can see it clearly here. We have all of them all lined up in the sequence, showing us that indeed we are in an uptrend. You can see price using the EMAs as dynamic support to push price all the way upwards. So notice how in an uptrend, EMAs are stacked from the shortest to the longest period, while in a downtrend, they are stacked from the longest to the shorter period. You can see it here. And so the next step for this strategy is look for a crossover. Look for crossover signals. Pay attention to EMA crossovers, as these can signal potential trend entries. A buy signal occurs when the 5 EMA crosses above both the 8 and the 13 EMAs during an uptrend. For example, you can see we have a clear crossover here with the 5 EMA, which is the red one, crossing above the 8, the 13, and the 21 EMA, and the rest follow suit. And this signals that we should be looking to enter a buy trade. We should be looking to enter a buy trade as soon as we spot this cross. So the next step is to place our buy entry at the next candle after this cross, and you can have your stop loss all the way below. Remember, do not solely rely on the EMA's crossover. You should also use price action to confirm your trades. For example, here we can see price was reacting off of another block right here, which was a major key level, a major support level. So this was just for added confluence. We have our EMA stacked already. So if you are skeptical about entering a buy trade from here, you could wait for the EMAs to give you the confirmation, which it did here. So we just place our buy entries and take our take profits all the way. Now stop losses below this low, this level here. That's how I would have been able to take this trade. You could use it for swing trading, hold this trade for the month, or you could just hold it for a few days, from Monday to Wednesday. And that's how I would have been able to take this trade using the Fibonacci EMA. So let's quickly look at a sell trade example. So for this one, we have price pushing in a downtrend. As you can see, this is a clear downtrend, and we should be expecting price to sell from these trend lines, and we have price touching this trend line here. We have price reaching this trend line here, so this indicates that we should be looking for sell opportunities. At the same time, we have the 5 EMA crossing below the 8, below the 13, and below the 21 EMA right here. So we could just enter a sell trade at the open of this long red candle and ride the trend all the way down. That's how I would have been able to capitalize on this trade. We have another touch of this trend line right here, so we have another opportunity to trade. If you use other block to trade, you can also see this major resistance level here, this supply zone. So we're looking to take trades away from this area. Now we have the 5 EMA crossing below the 8 EMA and below the 13 and below the 21 EMA. Now they are all arranged and spaced out, meaning that the downtrend has indeed started. We could just place our trades at the next candle, the close of the candle, as we had that cross, and your take profits should be at significant support levels like this one, or you could just use a fixed risk to reward ratio of 1:2 or 1:3 as explained. You can see that's how I would have been able to take another trade following the Fibonacci EMA strategy. So always set stop loss orders below recent swing lows for long trades or above swing highs for short trades. Use proper position sizing based on your risk tolerance, typically risking no more than 1 to 2% of your account on a single trade. Remember that the Fibonacci EMA strategy is a powerful method, but it's not infallible. Always combine it with sound risk management practices and continual market analysis to maximize its effectiveness. Alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.